Welcome to Bears in Exile. Today is Monday, November the 19th, and this is the market overview, looking at the Dow SPX VIX TNA UUP FXE GLD SLV and all the rest. So, big day up in the market, first in seems like forever, and away we go. Dow up 207 points, very nice. We finally did get the uptick. We were talking on Friday for the weekend video. The potential for reversal maybe due to the hammer candle bottom of a range and some secondaries that were ticking up, most notably the MACD histogram with a first day uptick. Well, it did go up. I didn't know if it would or not, and said that at the time. So it did go up. I also said at the time, hopefully when it gets its uptick, it would not be a one-day resolution to an uptick target. And while the Dow did not do it, many other things did, which is unfortunate. So we can see here the Dow, big green candle. The bulls are not out of the woods at the moment. Would still have to exceed this area right here, just about the 12,900 area. Still a ways to go, 105 points. And to reach the uptick target, we would need to hit, I just want it to be real accurate, just above 12,820. Only 25 points from where we are at the moment. Easy to do, but nonetheless, very nice. Working off much of the bottoming area in the heat map, which we've been watching. Everything, for the most part, moving up. 14-day RSI moving average being the holdout and still pointing down. Could this be a secondary reset where everything goes up to the top? It could be, but for various reasons, I am not convinced that that's the case at this time, and I will show why. So, anyways, 25 points to the upside on the Dow, and that uptick will be resolved. I'm going to take a quick peek at the 60-minute just to see what it looks like, and we can see the initial move up and then sideways, which is not a bad formation, stair-stepping formation. Beyond that, did it move too far too fast? Some. Beyond that, we have the 14-day RSI moving average moving up to the top, along with the stochastics holding high, backing off a little bit on the CCI, holding high on the RSI, and slightly down on the MACD histogram, but not something really critical at this time. And if I zoom out a little bit more, we can see how much room we have on the 14-day RSI moving average. It would appear to have a day or two left in it to get to the top, because I'm going to assume that that's where it's going to go, at which time it'll have really great alignment and possibly negative divergence in everything. So beyond Wednesday, do I trust the rally? No. Certainly it would be nice to see this high taken out at 12,900, and then perhaps we can have a shift in the pivot points, but as of yet we just don't have them, so I'm not going to get ahead of myself. Moving on to SPX. Alright, so now it gets interesting. Okay, we've talked about the need for a retest of the 200-day moving average, and it did happen today. It actually closed above it today. Really good sign. But there's some problems here. For one, we got the uptick. We noted on Friday that it was so darn close, but just didn't quite do it. Talked about the hammer, bottom of a possible range. And so anyway, it did shoot up today, but the problem is it met its uptick target all in one go, which is exactly what we did not want to see. And so now we have to see what it wants to do next and give us an indication as to what it wants to do. Beyond that, what would we have? Well, we have the channel from before, and so it is possible, very possible, perhaps, to go up and retest the bottom of this channel line, and that will be massively, massively important. Should be lots of resistance when it comes into contact with that. Secondaries, nothing special to report here. Same as the Dow, no need to rehash. Bottoming area is gone in the heat map. So, uptick target met. Have to wait and see. But it is an impressive showing for a single day. Does that mean that it's going to hold through tomorrow and Wednesday? It'll be low volume, so I suppose it's possible. But the real test, if it is able to keep going, descending trend line. Alright, going on to the VIX. Here's another reason why I'm not overly convinced about today. Certainly we have some mixed signals on the VIX. It closed way outside its lower Bollinger Band. That's a warning flag to me for it to go sideways or go up to get back inside. It did close below the major price consensus level for the month of November, which is also a bearish sign. And it exceeded the recent lows, which is also a bearish sign. So, do we have bearish signs? Absolutely we do. Is it too much too fast? It very, very well could be. We did talk about before the fight with the 200-day moving average, and this essentially just going sideways. Needed to see it break one way or the other. It did break one way, which is a good thing, but I don't know. I'm not totally convinced yet. If we pull back some, you can see the 14-day RSI moving average is still holding high. It is ticking down today. But we can see also we have a blip in the heat map for bottoming area, a very strong one. We can see that the CCI is very low. The stochastics aren't too far away from being low. The RSI isn't, the regular RSI isn't too far away from being low. But we do have the histogram, the MACD still ticking down. So yes, it's negative, but it's also looks to be extended already. Now let's say that it keeps going lower over the course of the rest of the week, which is entirely possible. Where would it be caught? Major price consensus level from October, which is, oh actually I can just tell right here, 1468. 1468. Going on to TNA, small caps. They ought to lead. Did they lead? No, they did not. Very similar to SPX when we looked at it on Friday. It did bounce up very nicely today, but it lagged the Dow and it lagged SPX in a candle aspect. It's green. It's not huge. It did not fulfill the uptick target. It came close. That's only about 52.10 roundabout. It's only about 30 cents away from its current position. Not the best. We also now have a big gap below. I would not be surprised to see the low retested. That would actually be a really good thing, as we could have a double bottom, but it is early. That would be preferable. And beyond that, secondary reset, entirely possible. Entirely possible. So we can see these go higher and then flip around. The 14-day RSI moving average is still pointing down. So something to be very, very aware of. And UUP, the dollar. Very interesting. And we had the Gravestone Doji inverse hammer on Friday. Talked about it. Pierced the 200-day moving average. Said this was a pretty good possible reversal signal. Turned out to be the case. But we got our downtick today, and it was resolved intraday. So whatever bubble is here, it's fixed. So this one is actually free to continue to the upside now. Not exactly what we want to see if we are of the bullish persuasion at the moment. I'm not of the bullish or bearish persuasion at the moment. Not really. Beyond this, what could we see? Well, going down to the long-term moving average bar, entirely possible, maybe even healthy. Go down, hit it. If it bounces off, very bullish for the dollar and very bearish for the market. So, critical time? Absolutely. In the after hours tonight, they downgraded France, who has lost their AAA credit rating now. Not a good thing for the euro. And so it is a good thing for the dollar. Fortune RSI moving average still pointing up. Everything else ticking down. Is this going to be a secondary reset? Well, if we pull back a good amount, Fortune RSI moving average still has room to move to the upside. So could this be a secondary reset? Flips around, joins it on the finish of the way up? Absolutely. Absolutely. And it is trying to work off topping area in the heat map, which we've been watching, and yeah, a little more relief, it would be a good thing. If we were able to drop enough that it could get a blip, that'd be an even better thing. But as it stands right now, downtick resolved, have to see what happens. There's another aspect to this. I'm going to go to SPY, same as SPX. Of course, the candle is different. It's actually hanging man barely, not what you want to see at this moment. But the important part. Oops, not the important part. This is the important part. The volume, the internal structure of what is happening. And what is happening? What's happening is we still have 5 reds. And the two most important, on balance volume, accumulation, distribution. Accumulation, distribution still pointing down solidly. This is not encouraging. On balance volume. Look at that. Got a move up with this move up. But what do we see? We see it approaching the trigger line, and this has happened repeatedly in the past. It happens above, it happens below, or it happened to be below it now, goes down, comes back up, attempts to do a cross, fails, 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 attempts to do a cross. Can we believe this at the moment? No. Not until it crosses. So, can this move be truly believed at the moment? No. Not until it crosses. If you were able to get that, you would have the volume weighted MACD try to do a cross. You'd have the dual volume flow try to do a cross, at which time you could get 3 greens, which would be a buy signal. Do we have it at the moment? No. Do we have any greens at the moment? No. So do I believe this? No. Going on to FXE, the euro. The bulls want this to be strong, and it did have a nice day, absolutely. And where is it coming in at the moment? It's approaching the 200-day moving average. We know that this should have a retest of it because it fell so hard. It hasn't had a retest yet. Retest is healthy, and now it's getting pretty darn close. Should it have some problems with it? Yes, it should. Doesn't mean it can't cross it. Just means it should have some problems with it. The downgrade in France is not going to help it. In addition to that, what else do we have? 14-day RSI moving average still pointing down. Secondary reset underway. Looks like it. Fast stochastic is already almost at a high, potential high, and everything else is following it. Question becomes, how much room is there between here and here for it to do up here? doesn't appear to be that much in some of these, but RSI itself, it does have some room. MACD has some room. MACD histogram has some room. Very interesting. That interaction with the 200-day, critical. Critical. And comp Q the NASDAQ. Alright. Yet another thing that, well, I'm not overly pleased with today. Not because it moved up. That's absolutely dandy. But we got our uptick. Uptick resolved intraday. This bubble is fixed. So the question becomes, retest the bottom or retest the 200-day? At the moment, we have to see what happens next, since the uptick target is met. And all the secondaries are the same as everything else. So nothing to rehash there. And 14-day RSI moving average still holding low. Is it a tick down? No, it's a sideways tick. So we should count on Apple to tell us something, right? It's worked off the deepest part of its bottoming area in the heat map. It got an uptick today after its very nice hanging man hammer on Friday, which we noted, and our uptick was resolved intraday. Is this a secondary reset? Well, it could be, but we have the 14-day RSI moving average going sideways. So actually, this one is better than many other charts tonight, simply because it has a better odds of shifting the 14-day. And if it does, that will be really good for the market overall. I don't mean to have a double speak of, oh, it looks bad, oh, but it looks good. But that's what this looks like today. And we have talked about a need to retest the 200-day moving average, which is just shy of 600. Could it do it now? That would be really nice. It would fit in with continued movement on things such as the Dow. But long-term moving average bar retest of UUP. But we shall see. And moving on to GE. Try to get a better read on the Dow. Well, GE got its uptick today as well. It got back above the 200-day moving average. Nice job. It did not resolve the uptick target by just a couple of cents. Just a couple of cents. And 14-day RSI moving average still pointing down. Everything else the same as all the other charts, no need to rehash. Although we have pointed out in the past positive divergence of the MACD histogram, which would take it up to about 21. And GLD, gold, not bad. Not bad. 14-day RSI moving average in ascent. Already had some corrective move in some of the secondaries with this move down. And this does not look bad at all. The question becomes, can it break the recent high? That's the all-important question. If you can, then gold has a shift in that low pivot point, high pivot point, low pivot point, and then a higher pivot point. So this is nice. I like this. So long as it's able to break this. And everything ticking up. Daily looks good on gold in my opinion. And SLV, have not covered this in a while. I was actually really interested in this over the weekend after looking at some charts and doing some reading. But it opened up big and I wasn't going to chase it. Beyond that, everything is the same as gold, but look at this. It's different. We already have a break of the recent high. Now it would be a matter of this high here, which it's very close to. But that actually doesn't matter as much because we already have a new pivot high. Pivot low, pivot high, pivot low, and we already have a new pivot high which can go higher. So shift on silver, yes, daily looks good. And this should go hand in hand with gold, so that makes gold look even better. And USO oil. When oil is bullish, the market is bullish. And what do we have here today? Well, we have a pierce of the recent high. We do not have a close above the recent high. It is a inverse hammer, barely. Closed barely above the upper Bollinger Band. Not the best sign, but it is what it is. Question becomes, can it close above this point right here? And if it can, that is good for the overall market. Everything moving up, and a first day uptick of the 14-day RSI moving average. Not bad. Not bad. Going on to JP Morgan, most important bank. And once again, we have an uptick, and the uptick target was met intraday. We have to see what it wants to do next. 14-day RSI moving average still ticking down. Everything else the same as all the other charts, which are ticking up. We have to see what it wants to do next. But a defense of the 200-day moving average, a nice sign. Very nice sign, and good for the market overall. Not bad. Not bad. And XLF, to round out the evening, we had the uptick on Friday. We noted it in the video. We gave the uptick target, and it was met today. How about that? One day. And we knew, or at least we knew the odds were good on Friday. So that is really nice. We have to see what it wants to do next. Everything else the same as JP Morgan. No need to rehash. But anyways, to me it looks like not bad for the rest of the week, which is a holiday week, shortened, low volume. The question becomes what happens on the following Monday. So certainly it'll be dominated in the news by the fiscal cliff and the supposed talks, deals, etc. Today was blamed on a further movement on a deal, but I don't know that I believe that. I really don't. I mean, the market has taken such a beating, having a blow-off day, completely natural, and it certainly happened today. So, question becomes, what happens Monday? Heck, even what happens tomorrow. France was downgraded, so could put a different spin on things. But won't know till tomorrow, and I hope everyone has a very nice night. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.